Hello, everyone. Welcome to week 3 of Terraforming Web3. In this week, we'll cover tokenomics and new models for gaming. As a recap, in week 1, we covered from Web 2 to Web 3, and in week 2, we discussed building Web 3 gaming ecosystems. We have a pretty nice plan for today. We'll kick it off with Loot Hero, the co-founder of Provable Games. Provable Games is a studio specializing in fully on-chain games and autonomous worlds, and behind some of the most played games on StarkNet, including Loot Survivor. After his presentation, I'll come back to dive a bit more into tokenomics and monetization models. So let's get started. Loot Hero, thank you so much for joining us today, and I'll pass it on to you.
All right, excellent. Thanks for the introduction. I will go ahead and share my screen. Just let me know when you can see it, Dylan.
Perfect.
All right, cool. So the structure of my presentation is going to be to talk about some very, very basic things with regards to tokenomics, like what is a token? And then about halfway through, I'm going to jump from probably level 1 to level 3 or something. And the reason for that is I want to make sure that everybody understands the basics, but then I also don't want to spend too much time talking about the basics because I think the basics are kind of known unknowns where you could probably just Google search what is an ERC20 or things like that. So I really want to deliver some new information as part of this presentation. But I'll start with some basics, like what is a token? Within the context of a blockchain, we're talking about a digital record of ownership. So if you own a token, it's representing ownership of some sort of asset. The types of tokens, there's generally two types, which would be a fungible token, which is usually described as an ERC20, and then a non-fungible token, which is described as a ERC721 or a NFT. So a fungible token has these properties. They're interchangeable, divisible. And then the basic use cases, particularly in a game, might be your gold balance, consumables like a health potion, or like resources like wood or something that you're going to select in the game. And then advanced use cases for an ERC20 or a fungible token might be to do dynamic pricing for resources or to distribute in-game purchases out to the players. And then non-fungible tokens like an NFT, they're unique, they're indivisible, and a basic use case could be like a weapon or armor in the game. And advanced use cases could be to wrap an entire game as an NFT so that the game itself is transferable, kind of like you would like a Game Boy cartridge or something like that. The divisibility of fungible tokens is particularly useful when combined with DeFi systems because it allows a token to cost $1, 1 cent, half a cent, or a millionth of a cent. Because even though you just have one token, you can split that token usually into like millions and millions of fragments. And I'll talk about that more a little bit later. So why tokenize? I think there's a lot of reasons, but I'll touch on these three. First is portability. So it allows you to move these assets, which is really changing ownership. I think when we talk about tokenizing, it's really bestowing this property of like ownable onto an asset. So if something's tokenized, then therefore it's ownable, which means it's transferable. It's kind of like the most basic property of a token on the blockchain is that it's ownable and therefore transferable. And portability has a number of implications. One that a lot of people don't appreciate is just basic security, where if you have assets like game assets in a wallet, if that wallet gets compromised for any reason, you want to be able to move those assets to a new wallet. And so portability is useful in migrating assets to a new account. The second one that's quite a bit more significant is composability. So if you can move these resources around, then it allows you to move them between games, or it allows you to do things like have games minted through other games. And that's a model I'll talk about a little bit later as well. So in general, why tokenize? Because it allows things to be ownable. It allows things to be portable and composable, say fundamentally. So looking at like some examples of ERC20s in games, there would be things like the things I have highlighted here. So like I mentioned, gold, like resources, things that you would expect players to be able to transfer in the game, but things that are fundamentally fungible, where 1 gold equals 1 gold. On the 721 side, which is an NFT, these are things that are non-fungible. So like your items typically have like extra metadata associated with them, like XP, superpowers, things like that. You're not necessarily just going to trade 1 sword for 1 sword in a game. So these would be examples of non-fungible tokens inside a game like Assassin's Creed. And then probably not tokens would be things that you don't expect the players to trade at all, like health. That's not very common for you just to trade health with another player, or like stats on your character, essentially. I think those are usually just a property of the character itself. Now, you could wrap the entire character in an NFT so that the character itself is tradable with the stats, for example. But in general, I think these would be an example of things that you probably wouldn't want to tokenize because you really don't want them to be ownable or transferable within the game. So this is where I'm going to go from like level 1 to like say level 3 or something. And so a big part of this for tokenomics, I think if when you start to get into advanced tokenomics, you should definitely be leveraging existing primitives where DeFi becomes one of the really powerful primitives that you can leverage so that you can get more for less. So the basic primitive for DeFi is what's referred to as an AMM, or an automated market maker. And the way that it works is usually explained by like X times Y equals K, or like a formula like that. I think the simpler way to think about it is just a seesaw, where you have tokens on both sides. And when you buy tokens, you're removing, when you buy, say, like a Stark token, so you have Stark on one side and like USDC on the other side. When you buy Stark, you are removing tokens from that side, which is making the price go up on the seesaw. And when you sell, you're putting tokens onto that side of the seesaw, which is making the price go down. And it's just a seesaw. And it's permissionless, open. Anybody can buy or sell to either side of the seesaw. And the seesaw is just going to automatically adjust based on supply and demand. So that's how an automated an AMM works. And I'll reference that later on and just think back to this seesaw. It's generally a pretty simple primitive. The other anchor I'll use is this game called Summit, which we're building right now, which has this capability where it's a free-to-play game, but you can buy things in the game. All of the assets in the game are backed by DeFi pools, so that's Seesaw. And all of the in-game purchases get routed out to who's ever on the summit. So this is a 1-versus-all King of the Hill game. So anybody who has a beast can attack. And then once somebody's up here, they're accruing all of the in-game purchases, and then everybody else is trying to take the summit. So I'll refer back to this example just because it's a relatively simple game and it demonstrates a particular flavor of tokenomics that I think is powerful. And so here's a diagram of this particular type of tokenomics where you're going to route all in-game purchases out to the players in a very efficient way using DeFi. Now, the thing about this particular architecture is that you can take pieces of this and build a bunch of different tokenomic systems, but fundamentally, like a lot of the core pieces remain the same. And so what we have here at the top is a game which is going to consume a token, which is a consumable in this case. So say like a health potion. And the way that players get that health potion is that they're going to buy it from this DeFi pool, which is that seesaw. So this line, just imagine it's a seesaw where you have blue tokens on one side and green tokens on the other. So if you want to buy a health potion, then you just put in some of these green tokens, which is the purchase token. So it could be USD, Stark, ETH, Lords, whatever you want. And you're going to buy the blue token. And then the player is going to use the blue tokens in the game to increase their health, to increase their attack, whatever the consumable does in the game. Now, on the bottom here, you can see that the way that that blue token, which is the health potion, gets created is through this DCA cell. And DCA here stands for dollar cost average. So what this means is, like going back to the seesaw, is you're gonna give somebody a bunch of tokens, and then you're gonna tell them, hey, put 100 tokens onto that side of the seesaw every single day forever. So Echobo, which is one of the decentralized exchanges on Starknet, has a DCA feature built in where you can give it a set of tokens and say, I want you to sell 1,000 of these a day forever, and it'll do so really efficiently. So the consumables get created by that process where it's transparent, it's predictable. All the players know that there's 1,000, 10,000, whatever number is, that many are going to get sold every single day. Now, if less than that are purchased, then the price will go down. Just think about the seesaw, right? It's putting 1,000 on one side every day. If there's not 1,000 taken from the other side, then the price of this will go down, which is completely fine. Because ultimately what this is trying to do is establish price discovery as safely and quickly as possible. So the cost of this consumable could be 1 cent, it could be 1,000th of a cent. That's completely fine. The key is you just want to find price discovery. So that's how the consumable is getting produced. And then you can see this consumable has this second property. And this is, each of these boxes is kind of a separate contract or a separate system. So your game is one system, Echobo is another system, and then the consumable is a separate system. And when the consumable contract is deployed, it already has this DCA cell built into it. So no one could turn this off. The other thing that ours has in it, which is optional in this diagram, would be that ours will automatically take all of the proceeds, which is the green tokens, and then it will buy these gold tokens and then burn them, where that gold token is the same token that's being issued by the game. So what this is doing is it's connecting the in-game purchases to the, it's directing 100% of the in-game purchases out to the players. So anybody who gets this token, this is effectively a proxy for all the in-game purchases, because you can see the green token goes here, and then it's going to get bought here. And what you can do here, another way you can leverage Echobo's DCA feature is if this was a one-time buy and burn, well, then whoever gets this token, that, like say someone purchased $1,000. You want to spread that $1,000 out over a period of time so that it's not easy for the person that spent the money to immediately recover that. So in our case, we've configured it for 30 days. So it takes, say, $1,000 and says, okay, I'm going to spread that out over 30 days, and I'm going to buy just a little bit every single minute or block or tick. And that's how you spread it out. So going back to here, while this shows a dollar amount, what's really happening is there's a total amount that's been purchased, it's in the pot. But as soon as that purchase happens, it's immediately in flight. And there's kind of like a real-time buy pressure on this token that everybody in the game can see. All of this is transparent, predictable, and immutable. So it's a really safe design for the players. The nice part about this design is that it's really, really scalable. So the last slide shows it with a single token, and it's kind of abstract. It's just a consumable. But this one, I go ahead and I add health, attack. So you imagine that now your game has lots of potions, which Summit does. And you can see that first, the most important part is that the game doesn't change at all. The game doesn't increase in complexity. It's still just consuming tokens and issuing its gold tokens. It doesn't know or care about all of the pricing at all. It's completely blind to the price of these tokens. It doesn't know, it doesn't need to know. All it knows is that if you give it one of these health potions, it'll give the player some health. And that's a really good design because it means that the game developers don't need all of that sensitive financialization code inside their game apps. It's all handled by Echobo, which is audited, hardened, securing, billions of dollars in transactional volume. That's what we want as game devs. We don't want all of that financialization in our code. And then meanwhile, on the consumable side, these are pretty much just like copy-paste contracts. These are all fundamentally the same. There's just a few different parameters, which is like how many of these per day do you want to sell? And so instead of the game devs having to decide what the price is of all of these assets in absolute terms, meaning like a dollar figure, but also relative to each other, instead of them having to do that, they can just put some pretty basic parameters, which is, well, I know that the revive potion is really, really powerful because when you attack and you die in Summit, you have to wait 24 hours to revive. But the attack potion, the revive potion allows you to instant heal. So that's pretty useful. So what I'm going to do is I'm going to configure this to sell maybe 100 a day. but the attack potions are much lower powered. So I'll do like 1,000 attack potions a day. I'm not controlling price. I'm just controlling scarcity, and then letting the players determine the absolute price and the price relative to each other. So how many attack potions is a revived potion worth? That sort of thing. You leave that all to the players using just like the free market to figure out what these things should be worth. And part of the beauty of that is that it really doesn't matter, as I mentioned before, in the case of a game like Summit, it doesn't matter if an attack potion costs a cent, half a cent, a millionth of a cent. It really doesn't matter. The game still works as long as you have some set of players that are willing to buy these at some price, essentially. As long as there's some player base that's competitive, this will eventually find a price that makes sense for that player base. Now, if the game scales and it's more competitive, then it's probably that the players are going to be buying more than whatever your target sale rate is per day. And then the price will go up, which is also good because the price is scaling with the competition and with the player base in both directions. Great. So in summary, a basic ERC20 would be something like a gold or a potion. Like that's a basic use case, is that you have a game and you have a fungible asset in your game, and you're just going to tokenize it, and that allows it to move around. A more advanced case of using ERC20s would be to achieve dynamic pricing and efficient reward distribution, such that you can connect in-game purchases. You can connect that loop of people buying stuff in game to player rewards. And this model here is like the simplest possible one, where I'm just going to buy and burn. But you can imagine that there's more sophisticated plugins here, where this is just buy and burn is just the simplest way to do it. But this just represents taking those purchases and recycling them back through the game economy. And you could do this multiple times and be extravagant as you want. This is just the simplest possible way to do that. On the 721 side, which is an NFT, the basic use case in games would be equipment like swords and shields. And then the advanced use case would be wrapping an entire game, which makes the entire game portable, which for provable games right now, we're exploring this concept of deconstructed MMOs or decentralized deconstructed MMOs, where we're embedding mini games within meta games. And that's a case where you're not just doing the items in the game, but the entire game itself is tokenized so that it can be embedded into these other games. And yeah, I think that's the meat of the presentation.
Amazing. Every time I hear you speak, I always feel like there's areas that I need to learn way more about. And I feel like I can have you present any kind of DeFi gaming concept for hours and hours and hours and hours, in which case, actually that might not be a bad idea for the next session for Terraform Web3. But again, Ludhir, thank you so much for an absolutely incredible presentation. For everyone here, we'll be following up with a quick fireside chat to explore these topics a bit further. For the audience who are listening today, please don't forget to send your questions. We'll answer them after this fireside chat, where we'll continue exploring the impact of tokenomics and monetization models in gaming. So we'll build on Ludhir's earlier insights into tokens and DeFi mechanics in games. We'll discuss a little bit about how tokenomics influences game design, explore how Web3 models compare to traditional monetization strategies. Then we'll touch on a little sustainability, player incentives, and the future of game economies as well. So let's just kick it off. There might be a little bit of a overlap with some of your presentation, but I don't think that's a bad thing. But earlier you did highlight, portability, security, and composability as key reasons to tokenizing gaming. So building on that, how does strong tokenomics actually influence game design decisions, player engagement, and long-term sustainability? Something that I'm really interested in is if you can share examples of differences you see between Web3 games that get tokenomics right and those that miss the mark.
Yeah, absolutely. I think in general, a lot of I mean, we have very few examples of Web3 games that get it right. And I think that's just because we're in the exploratory phase. Like everybody's trying to figure it out. There's no like patterns. If we knew if there was examples of exactly how to do it, I think people would be doing it that way. But we're on the frontier, so everybody's exploring. And so I think we're kind of figuring it out by process of elimination. I think the key to tokenomics is, or at least the way I approach it, is prioritizing safety of the community. And I think you do that with transparency and predictability. I think as long as your tokenomic systems are very predictable and transparent, it's less likely that people that things are going to go off the rails in a way that loses lots of people money and eventually like plagues your community with like bag holder syndrome, essentially. And I think anybody here who's building for the long term, decades, really you're building a brand, you're building a reputation, and you can't do that if you have if you're leaving like a legacy of bag holders, essentially. And so a game like Loot Survivor, for example, it's relatively simple. The revenue model is based after arcade machines, where you pay $3, you play the game, you try to get a top score. We recycle that $3 through the community, where the top 3 players get some, the VRF provider gets some, the client provider gets some. We recycle it in a way that's like not max extractive. And it's generally pretty durable and sustainable. Whether one person plays per day or 1,000 people play per day, there's no way to really game that system. And then we have the in-game collectibles that provides like the longer term, like cultural equity part of it. So yeah, I think my take on that is just everybody's still trying to figure it out. I think the simpler, more transparent and predictable the model is, probably the better it'll end up, or at least you'll be able to pivot off of it without losing your community. Because if you lose your community, I think it's game over. I think that's really the health metric in this space.
Nice, perfect. So building off a little bit on the DeFi side too. So in your presentation, you gave a pretty great example of actually buying consumable items directly through a AMM, in this situation, Kubo. You highlighted key benefits such as accurate asset pricing and simplifying risk and improving security, because many of these AMMs are audited. Maybe we can expand a little bit more on just how these concepts like dollar cost averaging, or actually using AMMs that are directly integrated into the gameplay, actually reshape the player's behaviors and expectations in a Web3 game itself, and particularly in the Web3 game, the economy within that particular game.
Yeah, so I think Summit is a really good example of that, where in the early model, the way it worked is that all of the financialization code was actually in the Summit game, and we were writing some pretty custom code to try to distribute the in-app purchases out to the player. So we were like home rolling all of that. And then we were at the Cartridge Dojo residency in New York, and Moody from Echobo was there as well. And so we spent a lot of time talking to him, and he pretty much opened our eyes to all of these possibilities. And one of the cool things that we gained from using DeFi and kind of having this middleware token, instead of issuing the money directly to the players, they're just getting a token. One of the benefits of that is you give the players the ability to decide when they want to exchange that reward token. So in the case of Summit, we call it Savage. So every block that you're on the Summit, you get 1 Savage. And then you know that there's this buyer for the Savage, which comes from the in-game purchases. But say the game launches, like next month or something, and you're on the Summit, you're collecting these tokens. Well, say the total in-game spend at the time is like $50. Well, you know that if you sell your tokens to the DeFi pool, you have like nominally $50 in buy. So that's the amount of money that's in the pool. But what you can do is, if you think that the game is going, if you're bullish on the game and you think the game is going to grow and there's going to be more money, then you can hold on to that Savage tokens and decide to trade it for the payment token at a later date, essentially. So it provides this way for early players to be bullish on the long-term success of the game and hold these tokens in a way that's still transparent and predictable for the existing players and the new players. So I think that's one example where you kind of have this meta now, which is great. I have the Savage, but when should I exchange my Savage for the payment token, or when should I kind of cash out for the rewards?
Nice. So it's all cool from a technical and composable perspective, but I really want to dive into what the actual impact is. How do we actually see that these DeFi driven models, how will they actually impact player expectations around ownership, value, and spending, specifically on virtual goods within games? I think people can, and more than that, it's just how is it actually going to be implemented in a game, and what would I, as a player in Loot Survivor, be seeing in my actual gameplay itself?
Yeah, I think again, going back to Summit, just because it's a really, I mean, it's purpose built for a lot of these tokenomics because it was, Moody awakened us to this. And then at the time we were building Summit. So it just features all of our best thoughts essentially. And so the thing that's interesting about Summit is that when you buy a potion, say for 1 cent, you can immediately resell that potion for about 1 cent, right? Back and forth. It's immediately bi-directional. And the players don't know about DeFi in the setting. Like they're just in Summit and they just click, add to cart, and it just has a price, which is based on Ekibo. They don't need to like go to DeFi or anything like that. But then they get the other direction, which is pretty non-traditional for most games, that as soon as you buy something, you can immediately resell it for about the same price. Now there's like slippage, right, where the seesaw is changing, but in general, you have bi-directional trade, which is really useful. I think the other thing that comes with that is that applies to really everything in the game. So when you have like your Savage tokens, there's a value associated with that the player can realize instantly. I think what we're used to seeing in traditional games is that you might have this like really rare like skin or like item in a game, and it has some value. So like people know that this thing is valuable, but it's really hard to pin down how much is this thing really worth. And it's even harder to realize that value. Like, do you have to sell your whole account? Are you like listing this on eBay? And so with these Web3 games, it really is instant. If you have these tokens in your wallet and it says that they're worth 50 cents each, well, then you can click a button and instantly convert that to 50 cents. And I just think that everything in the world generally has value. You could have like, I don't know, have like a cup on my desk, right? So I could say that, well, this cup, I paid 20 bucks for it. So maybe it's worth $5. It has some value. But the thing is, how hard is it to actually turn that into $5? And that kind of controls like the moneyness of that thing. Now, if you could instantly convert that cup into $5, then it's definitely worth $5. If I owed you $5, I could just convert the cup into $5 and hand you $5. So I think that's the other property we get from when you're tokenizing these assets, when you're using DeFi for price discovery and for backing the financial value of these assets, you get really efficient, high velocity transactions and trade, which lends itself to some of these outcomes where players can easily move bi-directionally. They can buy assets, they can sell assets, and everything has a very quantifiable, I want to say price, but it's really value, because it's really like that's what it's about, is having it's like value discovery for assets in the game.
Nice. So it's really kind of just about making purchases instant, safe, intuitive, and this gives players this sense of trust and clarity that will ultimately keep them more engaged long term. And I think that this kind of concept of feeling real ownership and actually seeing continuous value is what is one key component in just getting people to come back to a game that is actually fun to play. So maybe we can kind of move off a little bit and talk a little bit more on the monetization side. Web3 games historically has seen kind of this multiple different types of monetization models. We've seen token sales, NFT asset sales, we've seen play to earn types of business models, and we've seen many more. What approach do you actually see as the most sustainable and player friendly long term? I know that you were touching on, we're still testing it out, but I am curious because I think you've been involved in or have seen pretty much all of these different models, and they've worked and haven't worked in different scenarios. So curious your opinion. What do you think we're going to go to? What do you think is valuable? What do you think is not valuable from that?
Yeah, I think this is definitely one of, I mean, when we think about Web3 games as like the Web3 game model as consisting of a bunch of different components, and one of those being monetization, I definitely think that's the one that's like most in exploratory, and also most like the biggest culprit for like crypto games are a scam, because I think what we end up seeing is that like the founders generally maybe come away with some money, maybe the VCs come away from money with some money, but ultimately the ecosystem goes to zero and creates a lot of crypto games are a scam people, and kind of tarnishes the brand. So I definitely think it's like the frontier. This is where people are trying to figure it out. Examples of like going back to my previous point, I think in general, it continues to come back to like simplicity, transparency, and predictability. I really think that builders should prioritize those if they really want to be here and build for decades to come. In terms of specifics, so we've seen like pre-sales, so I'll just like touch on that, right? So you're gonna like sell a bunch of assets up front, and it's kind of like a Kickstarter model a little bit, where you're gonna like raise a bunch of funds through like a Kickstarter, selling these assets, and then build the game later. I would say that that's probably one of the more dangerous ways to do it, or like risky ways to do it. Like I can really only think of like one or two examples where that's been successful. One of them is like Realms World and Eternum, and there's really very few other ones. And I mean, there's thousands and thousands of ones that failed. So I'd say that's just the riskiest, because I mean, the market's changed so much. So you're kind of like saying like, hey, we're going to build this thing, but then technology is changing so rapidly that by the time you deliver that, it may be obsolete. And then there's the other problem where you're kind of giving early players maybe an advantage in the game or something, where people don't want to like show up to play like Monopoly when half the players already have, like, say half the players are going to start with $10,000, and then you as a new player are going to join with $100. Like that's not a very fun game. And so I think that's like one of the riskier ones. I think play to earn is another one that tends to fail more than it succeeds. I think part of that is it's hard to give away something of value for free. And I think at the heart of play to earn is that's what you're trying to do. You're trying to have this like free to play model where you're going to give away something of value for free. I think the failure mode there is really like Sybils. I think people, especially newer builders, newer builders or even just new crypto natives, underestimate how adversarial the space is, and kind of these professional extractors, which are like, well-funded entities that are just extracting value. So if no one cares about your game, if it has no value, then you don't have to worry about these professional extractors. But if it actually grows and is starting to get successful, then these professional extractors will show up. And if your game isn't heavily Sybil resistant, then they will extract all the value. And that's eventually going to send your game to zero. So I think what I would like to see more on this dimension is identity attestation services, where we can start to really prove that one user equals one wallet, or one wallet equals one user. We talk a lot about like daily active users in the space, but I think that's really just like a meme at this point. Like you don't know. I mean, one address does not equal one user, and it's so easy to spin up millions of wallets. So on the play to earn side, I think those are some of the challenges. I think all of these can be done. It's just figuring out the right combination. I think the last ones I'll touch on is just like marketplace, like marketplace trading volumes. So that's one that it worked last cycle, but then we saw it kind of erode. I think it's really hard to enforce royalties long term on these permissionless platforms. So that can be one that like it can work, and groups like Treasure Magic made hundreds of millions of dollars last cycle in trading volumes on their exchange. But eventually that kind of went to zero. So I think diversification is really important. And yeah, ultimately you want to try to like combine a number of these and really diversify your revenue models.
Interesting. So kind of the best approach isn't really just picking one monetization method. It's combining these NFTs, tokens, game expansions, and even potentially even traditional approaches to keep players happy and engaged long term. So I think that it's quite interesting actually to be thinking about. And you did mention a little bit on the identity attestation services. You mind jumping into that a little bit more? I'm actually kind of curious how you think about using digital identities and reputation systems that we can use from these identity attestation services. How would that influence how a player behaves in game? How would that influence, community trust, and maybe even potentially impact the game economies with fewer bots and more humans actually playing in the game?
Yeah, so I think there's a lot of controversy around certain identity attestation services. So like WorldCoin is one that I think a lot of people have strong opinions one way or another. My view is that what we should be doing is at the wallet level, you can pretty much have an account, and then you can check with a number of providers that says, hey, do you have an identity registration for this particular wallet? So it could be Coinbase, it could be WorldCoin, it could be Ethereum's identity attestation service, it could be a number of these. And you just get like a result back that says, yes, this is like a unique user. And then game devs can really decide which ones they want to use ultimately. But at the end of that, you're not gaining knowledge of the user. You're just gaining knowledge that this wallet maps to one user, such that if somebody creates 10 wallets, they all map to the same user. I think once you have that play to earn, maybe not necessarily play to earn, but I think that we can have much more, we can be much more generous with our onboarding. So you could have like an onboarding path where somebody joins the ecosystem and they're going to play, say, a game like Dark Shuffle. And if they can complete the campaign mode, then they're going to earn some credits that they can use to play Dark Shuffle on mainnet. Or say they get entered into like a weekly newbies tournament of Dark Shuffle that happens every week and it's just for newbies. I think if you can if we can get to one wallet equals one user, then I think we can do that profitably without having to worry about Sybils coming in. Whereas without that, there's really no way to do that. If anybody tried to do that, it would just get Sybil to death. You can't give something of value away for free on a permissionless open platform, like because the Sybils will come. But yeah, if you have identity, if you have some concept that this is an actual user that I could, there's like a lifetime value of that user now that I can do that math, then you can give them some opening campaigns and give them some credits and have a more formal on-ramp, which I think could be really valuable for the space for onboarding.
Nice. I would actually like to dive into the onboarding, opening campaigns, the credits, and the onboarding side, because I think you are doing some really cool things on that side too. Maybe you can share a little bit about what you're doing there, especially with some of the recent announcements that Provable Games and Dark Shuffle had. Maybe you can share some detail on that and how you can actually provide credits for an individual to play certain games as well.
Yeah, so one of the things that you gain when you wrap your entire game in an NFT, and that's something I wasn't able to touch on too much in the presentation because it's just an entire in itself is an entire presentation. But generally, the setup is pretty simple, which is a game like Loot Survivor. You're going to pay $3 and you're going to get an NFT back, which is your game of Loot Survivor. And what that unlocks is the ability, it unlocks no token onboarding, particularly when combined with other services like Paymaster. So because Loot Survivor has Paymaster feature, which means that the account that's playing Loot Survivor isn't responsible for the gas. The gas is coming through a separate entity. So it's kind of like if you were sending somebody like snail mail and you have to put the stamp on the envelope. Well, say you don't put the stamp on it, you just put it in your mailbox, and then the mailman comes around and he puts the stamp on it. So that's kind of how Paymaster works. So when you have those two things, which are in themselves pretty simple, what you can do is I can mint a bunch of games of Loot Survivor and then put them in my friend's wallet. And then without them having any tokens in their wallet at all, they can go to lootsurvivor.io and start playing Loot Survivor. They can actually play that game and they don't have any tokens in their wallet at all. And so this no token onboarding, I think, is really key because to date, while we get really excited about tokens in the like crypto natives do, I think non-crypto natives and like the normies kind of like it's an annoying requirement to play our games and they really don't want to deal with it because most of the time you have to KYC. Like, how do you get these tokens? It's a real pain to get them. So if we can make tokens purely a net value and a pure net value add to the gaming experience versus an annoying requirement to play, I think we gain a lot. So that's really the setup is if you wrap your game in an NFT, then you can send that game to somebody. You can kind of airdrop these games out. And if you have Paymaster, then the people that receive those games can then play very easily. And then I think the final piece of the puzzle there is like a service like Cartridge's controller wallet, which uses WebAuthn. So you're not having to install a separate app for your like wallet. It's really just an account, which is like an Apple ID. So when you go to lootsurvivor.io and you go to play, you just like Apple fingerprint or whatever you use for your passkey storage. And within 30 seconds, you have a new account. So it's new user does that. Within 30 seconds, they have a username. I send them a Loot Survivor game, and then they're just playing that fast. And I really think that's the type of velocity we need. You need to be able to tell your friend about a game, and then for them to be able to play it that quickly, not just on testnet, but also on mainnet, because that's ultimately where they can collect real assets, which will have value and kind of expose them to all of the other things that we talked about during this call.
Awesome. Honestly, I think that's one of the coolest concepts here of how we can actually start thinking about gaming being Web3 gaming being as composable as, what we see DeFi right now, and combining the two elements of it, combined with this kind of concept of tokens as a gateway to this ownership and identity, and actually using it as an onboarding tool that isn't just a hurdle, but actually an opportunity to transform how people actually interact and engage and onboard onto new games and discover new games. That's such a fascinating concept that I think we probably need a significant amount more time to cover. But I do want to ask you one last question before opening it up to Q&A from the audience. I want to kind of look ahead. I'm curious, like, what emerging monetization models or ideas in Web3 gaming really excites you? Are there kind of any experimental or upcoming trends that you really see reshaping game economies significantly?
Yeah, so the first one I'll mention probably won't seem that exciting to most people, but I think it's still important, which is the cost of gas coming down. I think the cost of gas has been one of those things where I feel like it's just been like a psyop within a psyop. And most people have been exposed to that psyop so long that they really think that gas has already been solved. Like, I mean, we've had Polygon, right, for like years. I'm talking about the old Polygon, like the side chain, and where you had transactions that were like a fraction of a cent, right? And it's fast. But the reality is that we really haven't had cheap gas with the settlement properties of something like Bitcoin or Ethereum. Till, I mean, like Starknet's really at the frontier of that, bringing that gas cost down. But we're still at a point where traditionally the cost of gas can't be higher, or the value of a token generally can't be lower than the cost of gas. And this is like pretty simple to think about just with like shipping a package. If it costs $20 to ship a package, you're probably not going to ship something that's worth like $1. And that was a real source of friction in the previous day. I think it was like kind of like the main, like one driver of a lot of like the Ponzi's and the scams of last cycle is we all needed our tokens to be really expensive because the cost to transfer a token was really expensive, on L1 in the early days. So of course tokens were expensive. As the cost of gas comes down, it opens up more opportunities for like microtransactions where you can sell things to users for 1/100th of a cent. But we can't do that until the cost of gas is less than 1/100th of a cent. So you always have this bottom threshold for the cost of these in-game assets where it's really the cost of gas or like an ERC20 transfer. So that'd be the first one I'll mention is just continuing to lower cost of gas, which on the Starknet side we'll get right with like Stu, the next generation Starkware proving system, Cairo native. I mean, we're going to see that keep going down and down. And that's a reason that like I've been building on Starknet for so long is because it was always kind of that long-term bet. The second one I'll mention is this new architecture around like deconstructed MMOs. So for those of you not familiar with deconstructed MMOs, that's an architecture that the traditional game devs have discovered somewhat recently and is growing a lot of attention. And it's really this thinking around, it's really complex to build this like perfectly balanced, massive multiplayer online game. So instead, maybe what we should do is just build the scaffolding and then let people like plug in dungeons and things like that into this world in a way that's open and permissionless, and therefore it can kind of like self-balance. So you can imagine like a Legend of Zelda Breath of the Wild where anybody can add a new temple or something. And maybe you can even introduce new currencies. And where do you use that currency? Well, it's certain shops in the game that are kind of part of that augmented reality layer. I think that's an example where Web 2 is picked up on this really good architecture. And I think Web 3 can do that, has a lot of advantages in that playing field because we have a single ledger. So all of our assets are being recorded essentially in the same database, which that makes them easier to cross-reference and reuse. We also have tokens which provide good incentive schemes to incentivize people to contribute because they can make money off of this in a permissionless way. And so this week, probably like Friday or something, we're going to be releasing this system called Budokan, which is our permissionless tournament system. And it's kind of the first example of a deconstructed MMO. And when you first see it, you're going to think like, well, this doesn't seem like a Breath of the Wild or something like that. But fundamentally, what this tournament system is showcasing is that we can release a contract, which today has very limited functionality, But as more games join the platform, this system is going to grow in the amount of like the player experience is going to expand infinitely without us ever having to change that contract. And that's really like the blueprint. And now we can move that into a world like a Turnum, where we also have like quest tiles. So you flip over a tile, and then you're going to play a game like Dark Shuffle. Not against other players, but just in a quest mode where you need to get to level 3, and then you're going to earn some Eternum resources, something like that. And it's the same blueprint that you have this meta game that's embedding these mini games within it, either via for tournaments or mini games, things like that. So that's another example. The last, there's like 3 at the end that they're kind of well, one's not far out, and then the last 2 I'll just like briefly touch on. So the client side proving is another really big one, and I think that that's going to come really with like Stew and the next gen Starkware proving system. And really what that's going to allow is for people to execute our games locally, say in their browser, and then prove the result. And what that does is it really defeats gas in a very significant way, because the reason that all of these other like low gas environments don't work is because ultimately you still have some central infrastructure that needs to be maintained and paid for. And that's why there's the concept of gas. You have to pay this gas because there's this infrastructure that needs to be maintained. And if that infrastructure is decentralized, well, then the providers need to be incentivized to run that infrastructure. Client-side proving is significant because now, as a player of the game, I'm actually running the game, and therefore I don't depend on this third-party infrastructure. I'm actually running Loot Survivor, and then when I get my score, I'm generating the proof that I got it to level 50, and then I'm just publishing my result with the proof on chain. And so what you're able to do is really squash all of those games, all the transactions for a game into a single proof. And for game studios like Provable Games, what we can do is, say you distribute like a puzzle every day to millions of users, like a Wordle type of game. Everybody's going to play the game and then submit the result back with the proof. You can then aggregate all of those proofs and just submit a single proof. And because that is so efficient, because you're distributing that the execution and the proof generation, you can really unlock a lot more models in terms of microtransactions, things like that. And then just briefly, because I know we want to have some time for questions, the last 2 is really about like agents. And the reason I'm leaving that at the end is because I think a lot of people are exposed to this meta, right? Especially like crypto natives, autonomous AI agents are going to be really significant. I think that what's obvious to people that are in this space is that agents are generally going to store their wealth using cryptocurrencies and private keys rather than fiat and traditional banks. And I think an implication of that is that they're going to, over time, represent a significant part of the market. They're going to accrue wealth. And I think that means that they're not just going to be really fun NPCs in our game. I think they're also going to be like consumers and players in the game, which means they're going to be customers of the game. You're going to be selling these resources to these AI agents as well. And I think you need to be thinking about them as a revenue source, like an addressable market that today has, say, combined a few $1 million or $100 million between them, but probably in 10 years we'll have massive amounts of money collectively. And I think they'll probably really want to play games, and fully on-chain games will probably be their preferred one just because they're really transparent, predictable. And then, yeah, last one, which is like really like, I mean, it might not be as far out as we think, but it's around like quantum computing and one-shot signatures. So what this scheme is it's pretty much like the fundamentals of quantum computing or quantum mechanics in general, where when you observe something, then its state collapses and you can kind of like change the result of something by observing it. Well, there's just like really genius mathematicians and cryptographers, which are working on this like one-shot cryptography primitive, where what you can do is you can give this private key to somebody, but as soon as they observe it or use it, it destroys itself. And this is like at the physical quantum layer. So when combined with client-side proving, this is nice because you can mint something for somebody on chain, like a game, give it to them so that they play it off chain, but you can ensure that they can only play that thing one time. Whereas right now, if I let you go off chain with a game like Loot Survivor, I can prove that your result was fair, that your result was based on the rules of the game. I can't prove that you only played the game once. And that's where there's still a use case for having every action recorded on chain, because you can't rewind time. So with some of these like quantum cryptography primitives, like one-shot signatures, we're going to gain this really cool ability combined with client-side proving to let people go off chain, and they can't like replay things. They really just get like the real world. You can't go back in time. We'll be able to introduce that into the game mechanics as well. And I'm excited about that.
Nice, awesome. Well, I think there's a couple things from the chat that we'll get to, but before, actually, let's just jump right into it. So I think there's a really interesting comment from Mathis in the Q&A. Basically, it's a comment, not a question, but I do want to hear your thoughts on it. Basically, it's suggesting that Sybil attacks aren't necessarily a big problem for play to earn if you actually design quests and rewards effectively. I think the idea that Mathis was kind of getting to is that similar to liquidity pools in DeFi, it's actually the reward structure rather than the number of accounts that really matters. What is your perspective on that?
Yeah, this is an area that I don't spend a lot of time exploring that part of the map. So it just could be that since I was over there last, they've made some breakthroughs. So yeah, if you want to share that with me, Mateus, I'd love to just update my knowledge and like figure that out. I mean, in general, what I'm trying to protect against is professional extractors extracting value from the ecosystem. And even if that's a small amount over a long period of time, if their cost basis is effectively zero, that's just like leakage from the community. And we already have enough headwinds that it's hard if you have that type of leakage. So it's not really about the amount. It could be a small amount. It's about the profit margin. And last I checked in, and I was playing a lot of games that had this, that feature, but this was a while ago. So it just could be that there's new architectures that solve that. And if so, I'd love to know them so I can take advantage of it.
Cool. And then Luis mentioned has a question on how do you recommend handling revenue distribution? Is it through DAOs or tokens?
So in the summit token design that I had in the presentation, you can see that there's this process where in the case where the revenue is from, say, a single consumable, like a health potion, and then people are buying that for 1 cent, whatever it is, and you have some revenue. What that particular system did is it used all of that to buy and burn this token, which means that, and it does it using dollar cost average, which just means that if you're holding that token, you can see on DeFi that there's somebody that's buying $10 a day of this token. So if you want to sell that token, well, then you can sell into that buy pressure. But what you can do is you can also split that up. So say you want to give some to your players, but then some to like a DAO, and say the DAO already has a token, like Lords, for example, in the Realms World ecosystem, then you can split that up and you can say, well, we're going to take a percentage of this and we're going to buy and burn the reward token, which the game is issuing. But then we'll take another portion and we'll buy and burn the Lords token off the off Echobo as well using a DCA. And it's the same exact thing. You're just buying and removing Lords from the ecosystem, which is putting buy pressure. So you can really think about that diagram as like the part where I have you're just buying and burning this one token. You can really get creative there and just distribute that capital. You can recycle it through the community or distribute it out through a DAO token.
Awesome. We just got one actually popping in. Let's read it. How do you manage governance for a game that wants to be open, decentralized with user-generated content? What incentives can be used?
Right now, I think that if at all possible, developers should avoid governance. I think it's one of those cases where in certain cases, maybe you have to have it. But if you can figure out how not to have any governance at all, I think that's preferred essentially, because it is just such a dangerous thing. You can end up with really bad outcomes, essentially. Like if somebody controls enough of the vote to change the parameters of a game in a way that gives them an advantage, they can eventually take over the game forever. Now, sure, you could get more sophisticated with your governance, but I just feel like the more sophisticated you get, generally the more fragile things get. Like we tend to think it's the opposite. Well, my fix for this is to make it more complicated. But in general, in most of life, complexity is like more fragile generally. Like the simpler something is, the more durable it is. So generally, most of the things that we're building for provable games are completely immutable. that we release something like Loot Survivor, and there it is. There's no governance, there's no changing the rules. If there's a bug or we need to change something, we just release another version. And then the community can decide if they want to move to the next version or not. And that's completely their choice. And today, all of the Loot Survivor updates, everybody's moved forward because it's like the community sees that, yeah, like you guys have fixed these things, it's better. So yeah, I think that's kind of like play to earn a little bit. I'm sure that there's people that are really pioneering the governance and figuring this stuff out. But for me, it's just I'm kind of pioneering different spaces. And I think immutability is, if you can do it, it's superior to governance essentially. And just, I mean, Uniswap does this, right? Uniswap doesn't they have the fee switch thing, but in general, it's like Uniswap 1, Uniswap 2, they just release a new contract and these contracts are immutable. And I think games work well using that same architecture as well.
Interesting. Well, Ludia, I really appreciate you sharing your insights. Honestly, it's always great getting your perspective on tokenomics, sustainable game economies, and just really hearing how you think new models are going to change up how we think through monetization and game design. So thank you again for joining us. Where can viewers find out more about what you're doing and what you're building?
Yes, you can find me on Twitter or X at @LootHero. And then Provable Games is the name of the gaming studio that I co-founded. So you can follow those two things for general updates. I'm a core contributor to Realms World. So if you want to join the Realms World community, I'm generally hanging out in there, building with those guys. And yeah, the last thing I'll just say is kudos and props and respect to anybody building on the Web3 gaming frontier. I think that particularly now, it seems like sentiment is at all-time low, but I'm as bullish as ever. I think that we have a significant set of superpowers that are kind of slowly being unlocked. And I think that part of what tends to be the downfall of a lot of narratives in this space is kind of people being overly excited about this world for 2 years, and then no one sees them, and they're thinking like, well, that clearly was not a real thing. All of these things are real, and those of us that are like still here building, an enormous amount of respect for all of you, and yeah, just let's keep sharing information. People exploring play to earn, people exploring governance. I think we all need to share information so that ultimately we can build things that promote the brand of crypto gaming and not detract from it. Essentially, like let's build things that are safe for the users, things that are fun, simple, transparent, and like collectively build the brand of crypto gaming together.
Amazing. So let's end it on that ambitious and exciting note from Loot Hero. Next week, we'll cover partnering in Web3 with speakers from Cartridge and Decentraland. So I'll see you all then. And thank you once again, Loot Hero, for coming on and speaking for the last hour.